Hello everybody, it's Nick here and welcome to our special workshop today. It's about trading precisely the profit zones. Before we start, can you please tell me if you can hear me and if you can see this page here plus my mouse moving? Just a quick yes. Okay, that's more than enough. Thank you very much. Some people still have, like always, issues with the audio. That's the software. It's a little bit weird, but other than that, it works. Yeah, as I said, welcome, and with us is also Jeff Wald. You already had the honor to chat with him here in the chat box, and I see also Gail is here, and looking at the list, I see a lot of students also joining today, which is wonderful, great. If you have any issues or some questions in between, you just write something in the little box, and I'm sure Jeff or Gail or some other also members might answer, because I cannot read and explain everything at the same time. Okay. I think the beeps will go away soon. It's just that still people are logging in and we get the sound in the background. I don't know. It won't be for long, I guess. Yeah. So again, everybody can see my mouse moving, and you can also hear me. So we can start, I guess, right? Is everybody ready to start, or should we wait? Okay, there we go. Perfect. So start right away. Why do we do this here today? I'll explain it really quickly for you. Many traders, as you know, get confused with the whole information overload. Everything you can find in the internet, a million indicators, 1,000 systems, what to do next, nobody knows really. So especially for the confused ones, I want to give them a reason to insist with trading and enjoy trading, and make sure that they're on the right track for, let's say, to say it simple, to long-term success and long-term profits. Okay, that's the goal. Yes, you want to enjoy everything, and it has to be fun, but you also need to make profits, so it makes sense, right? And the way I do it with the Spartan system, most of you probably know the basics. It is already not complicated. It is simple, right? If you study a little bit. So what we're trying to do is to make things always simple. We don't want to overanalyze things, and every time we have a workshop like this, we have tested it, we are sure it works, and only then we tell you or teach you and go for and start with a new workshop, whatever. Okay, so we don't change really things here. We just make it even more simple for people that don't want to use a lot of indicators, that are probably don't want to look at news and all these things. So want to keep it really simple, right? And one thing that many people ignore, or they just don't see it because of all the informations you get from the internet, or from different courses, or from trying to be all over the place at the same time, is that there are areas in the markets, especially on charts, that are very important for you, because these are the areas where you can get your setups, you get your trading signals, and you can start making profits there. And these are the profit zones. That's why we call those profit zones, right? And there are areas on charts or in the markets when the price is moving where you shouldn't touch anything. And that's, I guess, the most or the biggest mistake that the many traders do, is like they trade at the wrong places, in combination with really bad money management, right? And that doesn't work, not for long at least. You might get lucky from time to time, but that is not how things work, right? So we start right away. I have here the 10 steps. That's what you have to do to make it work, and I will read those. I mean, you can see them, of course, but I read it just everybody, so everybody remembers. And the first thing would be, of course, identify the main trend direction on your chart. And if you don't have a trend, then you have to identify the range. The second thing is a top-down approach, and that means, sorry for that, and that means that you start looking on higher time frames and then going to lower time frames. You combine time frames to actually see what's going on, what's really going on. You want to see if it's worth trading something there. Okay. Now, point 3 is combine 2 time frames after doing a top-down approach and find one powerful support and resistance area. I will show you, of course, live later on. It is recorded, yes. Point 4, draw clean vertical and or horizontal trend lines. Yeah, sometimes you need both. And point 5 is look for clear and clean setups, entries, and you need, of course, targets. You don't enter anything if you don't have, of course, a setup, but then you need your rules to enter, and you need good targets. If you don't have a target, you don't have a setup actually in an entry. Yeah, you might have a setup, but with no target, it's worthless. Point 6, calculate your risk by applying correct money management. If I have any typos here, sorry for that. That is most important, point 6, right? If you see a good setup and you think, okay, that's it, let's go for it, and you start risking half of your account, it won't help you in any way, because it could be that this is the losing trade, and then it's over, right? You lose 2 times, the account is dead. So money management is very, very, very important. Now, point 7 here, place your trade or trade order and add, I think that's wrong here, the APO, which is the account protection order, as we call it. Other people call it the stop, right? It's the stop loss, and you need to place it the right spot. So we call it account protection order because this sounds very positive compared to stop loss, which sounds really bad. Sorry for that. Let me close it. I forgot to. I think that's okay now. Point 8. Never expose your trading account to more than 0.5% until you grow. You grow that account by 8 or 10%. Okay. So here's the typo, by the way, again. This is very important because remember, when you invest, when you open an account, a trading account, this is money you invest. Let's say you open, I don't know, a $10,000 account, or let's start with a small account, let's say $1,000 account. Yeah, this is money you just put in to trade with, and this is money. That is already your money. That is money you are risking, yeah, from your own investment there. And this usually, especially when you start out, it's creating a little bit of stress. And what traders, especially new traders, tend to do is they want to grow it quickly, so they create this buffer, this kind of protection zone, right? So let's say you put in $1,000, you want to make quickly 200, 300, 400. So you have some profits, and if you lose a little bit, it's not really, it doesn't hurt that much, and it's not creating a lot of stress, which is, of course, logic. You know, it's common sense. Everybody wants that, but you have to be careful at that point, because that's where most traders do the biggest mistakes. Yeah, they put in the $1,000, they risk too much, they see a setup, if they have a system, and then suddenly it goes against them. They lose, I don't know, maybe 5%, maybe 10%, or even more. Then they want to make it back, and suddenly they're losing 20% of their account in no time, and then the focus is over. You cannot focus anymore. You don't follow the rules. You don't follow the plan. The account is getting smaller and smaller, and that's not what you want to do. So that's why you risk only 0.5%, okay? And that's already a lot. Yeah, it's already a lot when you start. I would even say risk 0.2 or 0.3%. Grow your account up to like by 8 or 10%, and then you feel that you have kind of a protection zone there, right? Because now you made money from the markets. That's not money you actually invested. You made it already, and then the whole psychology is changing. You feel much better. And when you get your 8-10%, that also means that you do something right. Yeah, you follow the rules, you understand what's going on, you start understanding how things work, and if you have your 10% profits, you can start expose your account maybe up to 1 and 1.5%. And when I mean 1.5%, I don't mean with one position, but sometimes, look, you're not trading only one pair or two, you trade maybe 5 or 10 pairs. So, I mean, 10 is a lot, especially when you start out, but you look at 10 pairs for sure, maybe 15 pairs or other products. So maybe you get 2 or 3 setups in the same day or the same week. So you might want to take all of those. So what you do when you see the setups I'm making, you start risking 0.5% or a little bit less, so you can expose the account to another 1% and open 2, 3, or even 4 trades to get to this 1.5%. Okay? Do you understand what I'm saying so far, or am I too quick? Just give me a quick yes if everybody is okay. Everybody's okay, right? Perfect. Yeah. That's it. Now, this is something you want to remember. Point 8 and 9. If you conquered the rest here, the start here already, point 1 to point 6 and 7. 8 and 9 is something you really want to remember. I would also, I think we sent out an email yesterday and you have these steps. If not, take a screenshot and remember this, please. Yeah? Okay, now, and then, of course, point 10, create and follow your trading plan after practicing until you make consistent profits. And then you do it again and again and again, okay? Great, perfect. So, yeah, these are the steps, and we're going to do this now live. Yeah, we do that on a chart. We practice together because we have about all in all 1 hour. And I want to give you 2 good examples. I will give you easy examples so you can start understand this. And yeah, then we go from there. Just wait a second. I have to pause this. Can you all see the USD JPY chart? Okay, great. Perfect. Now, what we're going to do is good for scalpers, it's good for day traders, but also for swing traders, right? And you can use this in all market conditions. Don't forget that. Yeah, you can. What we are going to do is for trending markets, but also for ranging markets. And there are 3 ways to enter and to manage a trade here. And today we're going to do one. Yeah, one that you can use right away. And what you see here is just This is just a bar chart, right? There are no candlesticks. There's nothing attached to it, because you really don't need it. Now you can add something. I'll tell you later on, but for the first steps, you really don't need anything, because price action and some lines we are going to draw will help you to find your trades. Okay, fair enough. And as I said, you don't need any candle patterns here. You don't need Heikin Ashi candles, which I love to use, but you don't need it. You don't need indicators, and you don't need to open multiple positions with this strategy if you don't want to, because the Spartan system, what we do is, most of you probably know, we split a position into multiple parts, take incremental profits, and leave a position running if it's worth it, if it looks really like it's being on for days or sometimes for weeks. So, and because I know especially in the USA and in a few countries, you cannot split a position, or you cannot leave the position running that has the most profits. You have to close this first, which is absolutely stupid. I don't know why, but that's how it is. I think especially for those guys that are located there, it will be very, very useful. Okay? And before we go and discuss all the detailed rules, we first have to practice something, and that would be trend lines. Yeah, two ways to do that. We have horizontal trend lines, and we have like classic trend following trend lines, right? But let's start with step 1 from the list. We just use the USD yen chart. This is the weekly chart, and we start with this example to do the whole thing from scratch. Point 1 was, who remembers, identifying the main trend direction if we have a trend. Okay? So just by looking at that weekly chart, is it hard to tell what's going on? So is that an uptrend or is it a downtrend? Just give me a quick one word. Everybody. Yeah, it's really that simple. It's an uptrend. Okay? What I will do, I will zoom a little bit in just for this example. Yeah, Jay says it's both. If you go down to a lower time frame, it will be both. That's right. But just by looking at the USD yen pair, this chart right now, it's a weekly chart. So it is obvious that yes, it's retracing. It's taking a breather in between, but it's an uptrend, right? I'm not talking about the latest candle. Everybody, please. I'm talking about the main direction. You know, what do you see when you look at this? And this is, again, sometimes I may be too quick. It's up or down. Again, it's up, right? It's an uptrend. We're just looking at the main direction using this weekly chart. Okay, so we will get to this point. We are just using this chart to practice all the steps. Okay, so what's the second thing we have to do? It's the top-down approach, right? That means we have to go from lower time frames, from higher time frames, sorry, to the lower time frames, and we have to figure out. Let's say we have to zoom in. Now we have to watch closely. That's why we do the top-down approach, right? Before we do that, I know it's point 2. We want to practice drawing lines first, yeah, and then we apply it afterwards. So what we need is to find horizontal support and resistance. This is nothing new. This is something many people do, but many traders have trouble finding the correct, let's say, support, horizontal support and resistance areas. And that's what we want to do right now together, to show you that it's not that difficult at all if you practice a little bit. Okay, so looking at that weekly chart, yes, this here moved down for a long time and then it moved back up. And what I want to see here, or want to draw, is a horizontal resistance line close to the price. So if I take this horizontal line and place it somewhere up here, that's not close to the price, right? Price is down here, and resistance, of course, is always over the price. And if I look at the latest high before the price moved down to here, I see that area up here, right? So in order to find horizontal resistance, we need to find back in history another area where the price reached close to this, if possible, if there is something. And if we find areas where the price stopped there and then retraced, we take this line and just attach it to all these areas where the price is pointing out on this chart. Okay, so this is our horizontal line. If I look at this highest point here, what, last week or something, right? And you look back, I'll see something in this area on the weekly chart. Correct? You don't, if you have it on the weekly chart, sometimes you don't have to go back that much. You will maybe find something in this area, right? But right now, just by zooming in, what we see is this: in this area in 2008, price touched this area after a big move down, retraced, it touched it, and then it continued a big powerful short trend for years. And then after many years again, price moved back up and it reached this area. Okay, and if you see the price reaching an area, especially after a long time, and there's nothing in between really pointing out like this, only that, then you know that it is an important resistance area for sure. Do you agree with that? Or do you all understand what I mean so far? Price reached this area in 2008, came back down, retraced, finds this area again. Now, the biggest mistake most traders do is they try to find a horizontal support and resistance area by the pip. Like, is that now, is my resistance at 110.1675321 or whatever? No, we don't do that. We just try to find the whole area of resistance, because we have rules before we enter a trade, right? We just need to find the whole area, and especially on the weekly chart, this could be 100 or 200 pips area. It's not by the pip. Do you all understand what I mean? Just give me a quick yes, everybody, please. I don't want to rush. Okay, great. So we take this line and I place it to this area. If you look back, you also find touches down here, 2006, where the price moved up and came back down. And you see this whole area from up here to down here is what? About 100 pips on this chart, right? So we have the lows here, we have the highs here, and we have an area of about 100 pips of resistance. So where do we leave that line? We don't place it at the highest points or at the lowest if we find another touch in this area, but we leave it in the middle. Okay, that's it. This is more than enough, close enough. Okay, That's it, because this will be very, very useful to you, and not exactly at the highest points or the peaks or because the markets never really go by these rules. The price will not stop exactly at 1.960 because it did it 10 years ago or last year or whatever. It could happen that it stops exactly there, but it's really rare. Usually it goes up another 30 pips or 50 pips or maybe 100 pips or more, or it won't even reach this high and retrace earlier before it's reaching this. So you need to find the middle, and you need to find it where you get the most touches. Now if I zoom in, you see that in this area you don't only get one candle, you have 1, 2, 3, 4, 5 weekly candles. Price is ranging in this area, moves up, comes back, you get another 2 weeks here, or at least one. Okay, it's going back up, and then it's kind of breaking this. You see it's breaking this for over almost 200 pips, and then it's getting back up. In previous support, now that the trend has changed to down, is acting now as a resistance. First it's bouncing here for 500 points, and it's going back up, breaking the lows, reaching these lows here. Now you have 1, 2, 3, 4, 5 weeks where the price is again, fighting, and then it's going back down. And if you scroll and find this area now, you see what happened. Price reached this area. You have 1, 2, 3 weeks, and the 4th week it decided to go down. So did this happen by accident in this area? Now that you know better, yes or no? Was that an accident that the price started to retrace there? Of course not, right? And that works especially on the higher time frames for sure. That's why we need horizontal support and resistance lines. There will be times where it's not easy to identify a line because price will just not stick to the price, and that means that the horizontal line is not that important. In this case you will probably find powerful trend lines or wedges. Okay, but right now let's focus on this. Great, so this is this. That's what happened, and I'll zoom out a little bit again. Let's find now an area of support. So what we do, we take another line, and price is here, so in order to find support we have to go, of course, below the price. If I go down with my with this line, where do you see the price pointing out? It's pointing out here, right? It's pointing out here. It's also pointing out here. And you go back, and you don't really have to go back that much. I just use this example because you don't have in between it in this area almost nothing, and that's why I used it. So in a rare, let's say, occasion where you don't find horizontal resistance on the weekly chart, you zoom out a little bit and find it there, like we did it here, right? So let me take this. Below the price, where should we leave it? Look, something is pointing down out here, down here. We have something pointing out here, and if I go look down to this area, I see a lot of touches here in this weekly range, right? So just by looking at it way below the price in this area, this is a line I could leave for sure. Do you agree? The reason, a touch after a big move here, a spike in this area, price almost touching. You can take the line and it be a little bit higher, of course. I'm just pointing it out, as I said, not exactly at the lows or the highs, in between. Something is pointing out here, here, here. It's touching here, and then a lot here. So even on the weekly chart, this is easy to spot. Can you see that? Do you agree with that? It's way below the price, of course. That's the easy line. Okay, great. Now, to find another one between here and here, higher, closer to the price, you have to take it and say, okay, look, this is the last time price created a high before it retraced. Yeah, before the new one, of course. So if I leave it here, do I have something in this area? Yes and no. Yes, I have here something. I have a spike, more or less here. But other than that, it's only one touch in this area. It's not like we have a lot of those here. So yes, we can leave it there, but then you see down here you also have something. Like you could then take it and maybe draw it down to here, because here you have a touch, and here you have a touch, and here you have one. And if you don't see a clean or clear touch, or you see too many in one area, saying like, okay, I have one here, I have one down here, and maybe also have one in between. We might have one in between. This is not good. You don't want to have horizontal lines all over the place. So what you do is you take, especially on the weekly chart, you use the ones that are really pointing out, okay, that are really clear to see, clear to spot. And this would be this one up here, and it would be this one down here, because you have a lot of history here. You have it pointing out, price is moving a lot, it's coming back, it's creating this lower high, this huge 1, 2, 3 or ABC setup. Then it comes back, it's breaking it, but it's then respecting it again once and twice, and later on it's a big support area, right? This is easy to spot on the weekly chart, right? So this is enough. If you want to draw more horizontal lines, which you have to probably, or you can, if you will see after doing the top-down approach in a few minutes. That's why you then switch from the weekly to the daily chart to zoom in to watch closely. And if you see something there, of course, you can draw your horizontal lines. But on the weekly charts, don't start drawing lines all over the place. Okay so far? So we found resistance in this area. Price bounced already, so it's a really good area. It's easy to spot. And we also found support because we had a lot of touches down here in combination with some others years ago, but they're pointing out. Okay, this is enough for horizontal lines on weekly charts, and you have to adjust those on the lower time frames sometimes a little bit, of course, because you're zooming in. Are we okay so far? Is everybody happy with the lines? Can we go on? Just a quick yes. Perfect. Now, what about trend lines? Let's take a trend line from here, right? It's MT4. It's free. Everybody can use it in case you don't use MT4. Quick yes, Bill. Okay, great. How do you draw a trend line? Most of you probably know. What we need is to see the price moving in one direction, up or down, and what the price does. It's usually not just moving down. It will retrace. It will take a breather, move down, retrace, and in a downtrend it will create a lower point on the chart, a lower low. It will retrace, take this breather, so a lower high, another lower low, a lower high, a lower low, lower high. So you will see lower lows and lower highs on your chart. And what you need is to find the lower highs. This is the highest point, this is the lower high, and connect those lines. And if you get more than 3 touches, you have a nice powerful trend line. You need at least 3. Otherwise it's just 2 touches, right? So you have a trend line here, you extend it, it looks like this. price is breaking this a little bit, then you have to adjust the trend line after a while. Then price retraced a little bit more, and it did this and this, and you adjust the line again. Now it's a historical line, so there's not much for you to do. It's not like it's happening live. So to draw the line here is very easy. And if you have more than 3 touches, 1, 2, 3, 4, 5, you have a very, very powerful line here. And it's also easy to spot on the chart. Price creating lower points all the time. Then it's finding bottom here. So you have a bottom formation. Price is creating the first higher high and higher low. And this is what we call our 1, 2, 3, which we will need. A 1, 2, 3 is it's very powerful when you trade in trends, right? And this would be afterwards a confirmation that not only the trend line is broken, but the trend has changed because the price created a higher high and a higher low, and you move higher. So at that point, you look at this weekly chart. The only trend line for a while you can draw is below these candles or these bars, right? And later on it will look like this, and then you have to change the angle again, because here on this weekly chart you don't get 3 touches, but you get them up here, and then you have 1, 2, 3, 4, 5, and in the end price bounces and moves up. Okay, so if the price is moving too fast on the, in this case on the weekly chart, you won't get the retracement that smoothly, right? You will see the retracements on the lower time frames, but not in this case on this one. This is okay. You, after the trend line break and after the higher high and higher low, it was confirmed. The trend chain was confirmed anyway, and you knew at that point that okay, we have a new trend. It's not a downtrend anymore. It's not ranging anymore. Price is going up. So we do our thing, right? I'm just doing that with you because we're going to need the lines. Is everybody okay so far? There we go. Perfect. So now we have on our weekly chart, we have horizontal support and resistance, and we have a trend line. Okay, so in this case, what is the line? What is actually the line we need? That's the one that is closer to the price, right? This line is of no use for us anymore. It's just to practice. Okay, but this one where we have a lot of touches is good. Now, about connecting lines, we're going to do this on the lower time frame on the daily chart. I will give you some tricks here also. You know already how to draw the horizontal lines, so let's switch from that weekly chart to the next time frame. We are still doing our top-down approach. We figured out the main direction. Now we have our horizontal support and resistance lines. We have a trend line on the weekly chart, okay? And when you draw your lines on the weekly chart close to the price, these lines won't change for a while because of the high time frame. That means you don't have to adjust your lines all the time. On the weekly chart, you do it like this and you can probably leave it for weeks and months, okay? But you have to adjust on the lower time frames. So what's the next step? As I said, we had the weekly chart. What do we do now? Go to sleep? Exactly, right? We go to the daily chart. There we go. Now if you look at it, immediately you will see details, and that's what we need here. This is a weekly support line. And if you look at your daily chart, do you need to change much here on this weekly line? Just by looking at it. Do you have 2 or 3 touches or more? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's great, right? So the weekly and the daily support line agree. Meaning it's not that the weekly is down somewhere here and then on a daily you have to go up 100 pips or something like this. This also happens sometimes, right? Because you have a range and it's easy to spot and you just have your line ready here. Now about horizontal support and resistance lines. If you look, just let me take this away. If you look at this chart, you still see these two touches are lower than those. You might say, okay, let's place a trend line here, horizontal one. Let's place another one here. And then we have two. And then you have again a million lines all over the place and you're not focusing on your trading anymore. Yeah, you don't want to overanalyze things. So what do you do? Again, I said it at the beginning. If you have support down here, where it's spiking a little bit, and you have support in this case 60 pips higher, more touches in this area, what do you do with this line? Everybody please. Do you put it here? Do you place it up here? Where do you leave the line? There we go. Well done, guys. That's it. I'm not talking to myself. It's great. So we leave it in the middle. Perfect. Yeah. And that is really all you need. Don't overanalyze it. I still want to trade. What we also had a problem before where we were trying to figure out if we have some other horizontal lines in this area on the weekly chart, but we didn't really get it clearly, right? But if you look at this right now, what could you do up here? What is something that is pointing out clearly now? On the daily chart. It's a historical chart, it doesn't matter. Yeah, it's ranging, yes, but in terms of a line, could you put another trend line or horizontal line in this area? Triangle trend, yes, there we go. If I take this and start from here, 1, 2, 3 touches, and you start extending it, it's ending up somewhere here. Okay? And now you have your 1, 2, 3, 4, 5 and more touches. Of course, you could also draw a horizontal line here because it's kind of hidden. Why? Because price is also moving a little bit higher, and now that it happened, remember it's a historical chart, right? So back in history, everything looks easy. But it's good to practice your trend lines. Yeah, you can also take a horizontal line and place it in this area. Why? Because you have some spikes here and price down here. If you look at it, if you leave it in the middle, 1, 2, 3, this also counts, false break 5, 6, 7, 8, 9. Do you agree that we have a horizontal line there? And members that are with us for a while, they know we traded in this range for a long time, right? Yes, you don't ignore it, because after identifying 2, better 3 touches in an area like this, a support, horizontal area and resistance, you have a confirmed range. And you need this line after here, after your 3 touches here and here, because you always expect that the price might come back down, finding the support and resistance areas between here, right? Yeah, thanks, Terry. Yeah, it's really easy. You have to keep it simple. If you start drawing the lines all over the place, it's just not helping in any way. Yeah, price will break out sometimes. It will be a fake break, and then it comes back. And if you have your rules, you know what to do. And if you have your lines in place, you know what to do. But if you don't, it's really difficult to decide. Yeah, perfect. So you have this wedge, and you also have horizontal support and resistance. One other important thing here, especially in this area, is, let me get rid of this line. Yes, it is a good line, but to make it easier on the chart, is if you go back to your weekly chart and you look at it, we don't draw the lines from the lowest point of the spike. We always try to start a line between, let's say, if there is a spike or if the candle is big, below, like in the middle somewhere, and then you usually also get a good trend line in the most touches. So yes, price did this and then angle changed a little bit, but all in all, if you look at it, in this area you had your horizontal support, don't forget this. Yeah, in this area down here you had a trend line. It started actually, as I said, from down here. Now that it moved up, you could also do it like this, but you know that this whole area is also a trend line coming from the weekly chart in combination with the horizontal support line, and you have a range. So at that point, just imagine life. You have your trend line in place, and between the bodies and the tails, here you have a big spike, so we probably draw it like this, yeah, to get it to draw the line between the bodies. There's no body because we have a bar, but you get the point, and extend it. You see price is not going down to this line immediately. It's starting to range up here, and then we draw a horizontal line at some point because we have some good reasons. And if you extend this line, it's ending up in this area. And what happens at some point? Price, when the price reaches the support coming from this trend line in combination with the horizontal line, this whole area, not by the pip again. This is important information for you, because when that happens, and this is something you might want to write down because it's very, 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 very powerful. A horizontal line in combination with a trend line, when the price hits that, usually two things happen. It will bounce and move quickly in the direction of the main trend. And what is with that main trend again at that point? Is it an uptrend or is it a downtrend? We know it's an uptrend, so what do we expect? Price moving higher, ideally. And if it doesn't bounce quickly, it might range more and then break. And if it's breaking, it will break quickly and you might get your trend change. Okay, so this is very important. You want to write it down, and you want to look for these things on a weekly and daily chart combination. Okay, or a daily and a 4-hourly chart combination. That's why I said we need two time frames that agree. Okay, but we're going into much detail right now. Let's go again back to the daily chart. And what you see here, this is our trend line. Price respected the horizontal support line, gave some good signals, retraced, and actually what it did here, if you look at it, it created no higher high, but it created a higher low, and then it came out, so a 1, 2, 3 or ABC, and then it came out of this. It found this previous high, yeah, and that was only one touch actually, and some in this area. And yes, in this area it retraced about 60 points, so it took a breather because of this horizontal resistance. But the main trend is up, and all the higher time frames agreed, so price continued to move up. And if the main trend on the weekly chart is long, if it's not confirmed, if the change is not confirmed, like it's moving down here and breaking weekly support, horizontal and the trend line, you always want to focus on the main trends, and the main trend is long. Yeah, write that down, please. Yeah, focus on the main trends. And what happens often, people start to sell here. Yes, here's, you see another high, and price respected this high. It retraced again about 90 pips, but then it moved back up because the main trend, I say it again, is long. Okay, and again, what I'm trying to say here, yes, you can place your horizontal line to here because you have two touches, and expect the price to do something here like bouncing or retracing. Yes, and it did, but it did it only for a couple of days because it was just too powerful. And if that happens and price moves up, you know the main trend is long. You just have to focus on long trades. This is something I say often, and I said it probably 200 million times, but that's how it is, and that's the important part. Trade with the main trend if you have it. Yeah, if it's confirmed on the weekly, you see it on the daily, don't trade against it. Cool. Now we have horizontal lines, we have trend lines, we have the main directions. Everybody okay so far? Saying too much, I know. Always get carried away. All good so far. Perfect. Now what about, we have our horizontal lines. We can get rid of this one right now. We don't need all the others. It's over. What about trend lines? Here. Look, if I look at this from down here, the only thing I see that where I can connect 3 touches is this on the daily chart. Yeah, you can adjust the angle all the time. Yeah, that's the only line I see here on the daily. Do you agree? Or if you take it from here, maybe this one, because it's very steep and quick. 1, 2, 3. Great. And if I switch now, I have to switch actually to the lower time frame because I look for entries, right? So what is the next time frame we use after doing the weekly daily? We switch to the 4-hourly chart. And on the 4-hourly chart, you see things clean and clear now. Yeah, you have your 3 touches. One, you have a confirmed horizontal trend line break. Horizontal line break. You have a higher high and higher low. You have a 1, 2, 3. You have another one, and price is moving up. So you also know that the price, you cannot exactly connect it, connect these 3 touches here. You have 1, 2, 3, and later on it's already your third here, but later on you just change the angle of this line, right? And then it looks like this. If you extend it, it's ending up here. And if you have to change the angle of the line like you did here, this is also coming from the daily, right? And you just adjusted it a little bit on the 4-hourly because when you change time frames on MT4, it's changing the line a little bit. Again, you have your 1, 2, 3 touches, and this is actually the extension of this. So you had already the 3, and now that's the 4th and the 5th and the 6th. You just adjust the line because the price is moving too quick. It's not going back to here. As long as it is creating a higher and higher high and higher low, you're okay. Yeah? And if you can, you have your new touch here and you extend it, you see what happens. And again, how do you draw the lines? Not exactly at the lowest points, but somewhat in between, especially if you use candles between the bodies and the tails. And I will show you soon. I just want to make sure everybody gets the trend line thing. Look at this one. You have already your 3, 1, 2, 3 touches. You change the angle. It's the 4th. If you extend it, look what happens to it. It's ending up here. So again, do you think this was just by mistake? No, it was not. This is a 4-hourly chart, and it's also a daily trend line. And the extension is here, and price came back down to that 200 points, and like magic it retraced back up. Why? Because there was a reason. There was a daily confirmed trend line with more than 3 touches. Everybody okay so far? I use a trending pair, but it's not that easy, that example. Yeah, it's something in between. I didn't want to use only the easy ones. Okay, perfect. So you have a trend line here, starting from down here. Let me draw it also so everybody understands. So we have, that's the same trend line. It's changing an angle, and when it's breaking, it's still respecting the extension of the previous line. Okay? And when you master this, I'll tell you right up front, if you master this, and this is not that difficult, that's all you need to make a lot of pips. Okay, and right now I didn't add any indicators. There's nothing. It's just price, it's trend lines, horizontal support, and resistance. Cool. Everybody's okay so far, right? So we have point 1, identifying the main trend. We have the top-down approach, weekly, daily, 4 hourly. Yeah, more than enough, especially for day traders and swing traders. And we also have point 4, where we draw clean and clear vertical and horizontal trend lines. Now, what is point 5? That would be looking for setups. Right? We want to look for trading setups. Yeah, we can also do that, but right now let's just start with the first time frame combinations, which would be weekly, daily, and daily 4 hour. Yeah, we don't want to overdo it here. Okay, great. There we go. This is our trend line. Now, you know that I like to do things easy. I want things to be visible on the chart and make sense. And in order to help you with your trend lines, especially with the combinations of a 4 hourly, daily, and weekly chart, okay, I personally like to add Heikin Ashi candles to my charts. You don't have to do it, yeah, but you can. That's why I said you don't need anything. But if you want things to look nice and easy on the chart, this here, the bars look complicated compared to Heikin Ashi candles. So if you agree, I'll add the Heikin Ashi candles so you can see how helpful they are and how easy it would be, right? As I said, you don't have to, but it's easier to find your entries, and it's easier also to exit and place your account protection orders. Yeah. So if you want, I add them. I was thinking about it because I will use it anyway. Yeah, that's what I do. I use my Heikin Ashi candles. So what I do, I just use the Spartan Trader FX template has also a couple of EMAs. So I'll just use a simple one. Okay, and I have to go back to the daily chart for you to draw the lines again. So let me get this right. Okay, that makes things really easy. We have this is the daily chart. We have this, which was our trend line, right? If I switch to the 4 hourly where we started, I zoom out, it looks like that. So we have exactly the same thing here. We just have a little bit color on it and make it visible. What I also have, as I said, you don't need it, but I'll leave it just for now to help you with your trend line drawing. This is the EMA 36, moving average exponential 36. That's the one I like to use. You don't have to put it on. I just want to show you how it helps with your trend lines. Let's get rid of that. When you draw your first 3 touches, okay, looks about like this. You see the 36 EMA is following price action usually, like this. And if you have a nice smooth move, it will also help you drawing the trend lines. Okay? Look at this. Then you start from here. 1, 2, 3 touches. You see how the 36 EMA, if you cannot get the touches exactly with your line, You see how the 36 EMA in a smooth trend helps you because the price is bouncing on it. Okay, it's bouncing on it again. You extend the line. It's bouncing on it again, especially in a smooth move like that. Okay, and here again, and if it doesn't do it on the daily, in a daily, it's far away. But this is your trend line. And on the 4-hourly chart, the 36 helps you drawing the trend line that is already confirmed. Yeah? Already confirmed on the weekly or at least daily and 4-hourly chart. So if you have the trend line already, then the 36 is helping you, yeah, showing you the way. Do you understand that? Yes, I take vitamin C. Sorry about that. It's my cough. It's allergic stuff. Yeah, as I said, you don't have to, and I get rid of the 36 right now because I said I promised you don't need it. But I'm showing you how helpful it can be, right? Now you have your trend lines, and you have your more than 3 touches, and price is creating what we call 1, 2, 3s or ABCs, and these are the magic patterns in a trend. Price comes back, you have a confirmed trend line with 3 touches. Every time the price comes back, it creates a higher high and higher low in an uptrend, and it's finding your trend line, or it's creating a new angle. As long as you see higher highs and higher lows, you can connect your 3 touches, you have a reason to trade. Okay? Yeah, you have allergy to the yen. I have one particular, what is it? Sorry, the GBP. The Euro GBP. That's one that I have an allergy. A really bad one. I don't know why. It did not do anything bad to me, this pair, but I just don't like it. So great, yeah. There we go. So we have your touches, you have the price creating higher highs and higher lows. It's coming back, price is coming back. Sometimes it's not touching the line, but in the end it will, and every time when it touches your line in a powerful trend, if it's confirmed on weekly, daily, or daily and 4-hourly, then you have reasons to trade. Okay so far? It's very important that we are all okay so far, because we don't have much time. I want to make sure we're all okay. Great. Now, in a trend, because this is a trend, and after you see your 3 touches on a trend line or in a range, remember on the daily chart, you have 1, 2, 3, 4, 5, 6, and you have a lot down here and also up there. Every time the price touches an area, this is confirmed by your 3 touches. This is the profit zone. And again, if it's combined a weekly and a daily, or daily and the 4-hourly, or 4-hourly and the 1-hourly, that's how far we go. That's more than enough. Then you have a profit zone where you want to trade and look for setups. In between, for instance, if I use this range, in between here, you don't care. You can put 1,000,000 indicators on it, and your MACDs and your RSIs and whatever, and all the EMAs you know. In between, trading here, when you see something clear like this that is confirmed on higher time frames, everything you touch in between is not really trading anymore. I know it sounds hard, it sounds like I don't know, maybe too whatever, not polite, let's say, but it is how it is. You know, if you have a confirmed support and resistance area, you have your trend lines, You have your touches, especially in the higher time frames. You want to look for trades at the lows where you have your most touches or the highs, not in between. This is not your trading zone. Do you understand that? You want to trade precisely at or in the profit zones. Okay, so far? Great. Perfect. Now this is the range. What about the trend? It's the same thing. If you have something here on the daily chart and you go to the 4-hourly and you get, maybe sometimes you get only 2 touches on the daily, but you have on that line on the 4-hourly already 3 touches, then you have a trend line. As long as you can see the 3 touches in a combination, like daily 4-hourly or weekly daily or 4-hourly 1-hourly. Okay? Very, very important. When that happens and you have your confirmed 3 touches, you start looking for trades. And as I said, I'm already 1 hour and 5 minutes here, and we said we do it below the hour because Jeff wants also to share his great stuff there, but so I'll try to make it quick. I'll give you one very, very good strategy you can use right away. Yeah, and that would be if you use the, now that we add the Heikin Ashi candle, I'll give you the version with the Heikin Ashi candles to enter, okay? You can also do it without those, but then it's more complicated. It takes a little bit of time to explain. So let's do the Heikin Ashi candles because they're easy and they're visible, easy to spot and everything, okay? So what you do, that's what I'm going to explain now, right? Guest number 1, no name. I explain the entries and exits and everything right now. Look at this. We start with a range. At that point, you don't know if it's going to be a range. Price is going up, it's creating a higher low, and at that point, it's not creating a higher high anymore, right? It comes back down. It's not creating a lower point really because that's the lower point. So you get you start expecting, or you think about, okay, this might not be a trend anymore. It's probably going to range. So you watch closely. Yeah. So you tell me, price is going up here. You say, okay, great. Maybe it will continue the trend. But in the end, it goes back down. It stops at that point again. And then you see a big white candle is going back up. So at that point down here, yeah, after price failing to move higher and staying over resistance, would you know at that point that this is a range? Probably also earlier, at least at support. Would you figure that out at that point? Yes or no? Yes. Yeah, so you're identifying your range there latest. Probably also already here, because you got 1, almost 2, and then it's getting down to here and then going back up. So at that point, you know, okay, it's probably going to range for a while. Here you think it's going up, but it doesn't. Only for a little bit. It goes back down. So at that point, for sure, it's confirmed, especially when you see it moving, bouncing on it, and moving higher. And the bouncing part is the important part for you. At resistance, the same story. 1, you don't know yet. Here, on this time frame, the daily, you suspect it because it's going back down again. When it breaks, you think, okay, that's over maybe, but then it comes back down. And then you know, okay, forget it. This will be a range maybe here, or maybe up to here, but it is a range already. You also know something which it's difficult for you now to remember because it's a lot of information. You know that you have a weekly trend line, and here it's easier to draw because now you can see on your Heikin Ashi candles, you can see the spikes. And that's the great thing about it. If you draw the lines, your trend lines, I'll draw the trend lines by looking how big the spike is, and I'll leave my line, or start my line, between the body and the tail, so in the middle, and I draw the line through that, okay, through the bodies and the tails. Then I get my average nice weekly trend line. I extend it and it looks like that. And at that point, because it's ranging, you also know on the daily chart that your support is here. If the price is not touching that, it's probably going to range until it's finding that line at some point, which it did here. Ranged a little bit more and went back up. Okay, so this is also information, but you don't have all that thoughts if you don't have the experience yet. Yeah, I'm just telling you right now. Simple things you have to get used to first. Okay, now you have your range here. You extend the line. You know that you also have some breakouts here. And what you do, especially when the trend on the weekly is up and you know that the main trend is up, but the daily is ranging. Would you look mostly for short trades, or would you try to look for long trades? Yes, it's a range, but what would you prefer to do knowing that the weekly chart is up? Yeah, mainly for longs, also for shorts if the price is far away from your support line. Look, which is down here. You see the price actually touched it, spiked on it. Yeah, both if the price is far away from your support, but mainly, of course, longs if the main trend is up, just to keep it really simple. Now, if you have the confirmed range on the daily chart, you can do both, of course, but you need rules. And the simple, or the easiest rule in this ranging example here would be look for the bounces on your support line, the confirmed 3 touches line. Okay, so let's say price came down, you know you had already your 3 touches here, it didn't move higher, so you expect the range, price is coming back down, it's reaching your support. You say, okay, wonderful, so what do? I just go long just because it's hitting this line, or should I wait for something? Now if you are experienced, you can do it aggressively, which I won't cover today. We do the more conservative thing, right? And that would be waiting for something. Okay, and this something is either a color change of the Heikin-Ashi candles, which means price is reaching this line, your confirmed line, and then you have to wait for the price, for the candle to, of course, open low, because when it's reaching the next day it will open somewhere here and close high, and ideally, of course, change the color from red to white, because on the Heikin-Ashi candles what we measure here is the power of the buyers and sellers. So the buyers are white, in this case I put the color, and the buyers, and the sellers are red, right? Makes sense. And as long as the candle is red, usually the buyers are stronger. Of course, if you see a candle opening low and closing high, let me zoom in, you know at that point that the buyers are stronger, but because the Heikin-Ashis work a little bit funny, they always open in the middle of the previous candle, so it could be still that you see the color red. But ideally what you want to see is the price bouncing on your support and changing the color to white. Now I use this example because this is weird on the daily chart. This is a white candle, right? It opened up here. But if you look at it, when this opens, is it worth trading longs in that range at that point? What do you think? Would you say yes? No, right? Why not? Because it's just very, very close to horizontal resistance. Yeah, even if you don't leave it at the lows, as I said, between the bodies and the tails, it's too close. And so this on the daily chart is not the way to do it. Why not? Because the range you see here on the daily chart is not a big range. It's only 140 pips or 150 pips range. And on a daily chart, that is almost nothing. So what can you do about it? If you want to trade conservatively, let me try to draw a horizontal line somewhere here. Or let me first use a different example in the same range before I go to that. Down here, it's the same range, but the candles are getting smaller. Here you have a spike. Price is moving back up. And here you get your white candle on the daily chart. And if you look from down here to here, it's about 80 pips. And the range is only 30 pips, 20, 30 pips. I mean, the entry happened above that range about 20, 30 pips. So would it be worth trading it from here and target this? Forget the stop right now. I'm just talking about the entry and the target. Would you say that's a good one? Yes, it is, right? Why? Because just visually, if you look at it, you know this is the middle of this range. It could also move higher. That's why you leave it there, because you have the most touches. Here's your entry. And then you say, okay, is it worth to try this? It's only 75 pips. So how do we figure out if it's worth it or not? Any ideas? And I'm not talking about splitting any positions. I'm not talking about incremental profits. I'm just talking about taking a trade, placing a stop, having a target. So any ideas? What is important? Risk reward. Support smaller than the objective. Yes. Yeah, you're all right. Yeah, that's it. It has to be, to say it simple, it has to be worth it. If it's not worth it, we don't do it, right? So is that worth it? We said already by looking at it, okay, it looks far enough. We have a big space. It depends on really where we place the stop. So where do we place the stop? We have the horizontal line and we have the most touches here. We ignore some previous spikes, okay, because the main move is between this area. We don't ignore the one before our entry, like this is our candle we are talking about. This is opening here, it's closing up there, and it's white. It changed the color. Yeah, this is the lowest point on the, this is our support area, major support, and this is the spike happening before our entry when the price decided that no, I don't want to move lower. In the end I go back up. So you measure the distance. You say, okay, below the line it's about 40 points. Yeah, because after that spike you don't expect it to crash, you want it to go back up, but you also know that it already moved that far. Okay, and this is a horizontal line. It's not a trend line. It's not, the price does not create higher highs and higher lows here. So you ideally place your stop below the low and below the horizontal line, which in this case about 50 pips plus the spread, of course, right? You place it not exactly 1 pip below the low, but of course like at least 5 or 10 pips below. Then you have a, let's say a stop of not 50, let's say 55, yeah, or maybe 60. And now you're targeting about 70, 80, which is not twice the stop. It's not 3 times the stop. It's about 1 time plus a little bit the stop. Okay, and because we are trading in the range and we know where the price usually bounces, and we are not traders that like to just read books and read what everybody's saying in the theory, like, okay, if you have a stop of 50, you have to go 400 or something like that. Yeah, in theory that's okay, and we also do that when we take incremental profits. But you are, as I hope, you are not stupid, right? You see things on the chart. You see what is happening. You see we have the range and the price. Sorry, it's in too low. It's probably there we have the most touches. Sorry. So in this case, with your 60 pip stop, you're going for over 100, which is 1.5 times the stop. You are okay to go anywhere, right? But even if it's only 1.5 times the stop or less, if it's in a range, okay, and it's a range, it's confirmed, and you have, it's just visible, it's still worth doing it because it did it already a million times, and you don't know when it's going to change. Also, what you do, you're not only trading in your ranging area there, which is confirmed, you also trade when you go long, in this case with the main trend, and close to your horizontal support that came from down here, right? Sorry, the horizontal, no, I mean the trend line coming from the weekly chart, right? So you have it all in this area, here and here, and yes, that was your entry. Sorry, I think I picked the wrong one. We set this one, right? It's the same, doesn't matter if it's that one or if it's that one or afterward that one. As long as you have, the target is big enough, it's at least 1 time the stop or a little bit more, you're okay to go. Is it okay for everybody so far? Yeah. Jawohl, there we go. Yeah, it's very important that forget the theory and what everybody is saying. If you draw your lines and you know that that's how the markets work, you expect the price, if it really wants to continue trade in the range, to move up and hit resistance or down to hit support. Okay? And if it's only 1 time the stop, like the same distance with the stop, it's okay. If it's 2 times or 3 times the stop, even better. Yeah. Look, John, as I said, it is okay 1-to-1 if it makes sense, because the chance that you make this 100 pips or the 70 pips is big. You're trading in the range. Yeah. Sometimes you have a perfect setup and your target is maybe 10 times the stop, and it goes against you anyway. So we have to forget a little bit about the theory. You don't trade 1-to-1 all the time. Usually we have a much bigger target than the stop. Yeah, I will show you another example. Sometimes we have a stop of 50 pips and we go for 200-300 pips because that's the next resistance area. But here we are trading in the range, and the range is small, so we make the best out of it. Okay, so far? And again, I'll give you examples. It's confirmed, let's stay here, the third thing. This is a big candle on the daily. The stop is too big, target is too small, you don't take it. Makes sense. Here the price comes back, it's getting back into this area, you get a big red candle for short. But now you have a huge stop of 230 pips and a target of 50. Is it worth it? No, it is not. Yeah. Here we have, this should be a white candle, but it is still red. Sometimes, depends also on the broker sometimes. If that were white, then it's probably big enough. This here is a white candle. It's close to support in this range. You have a big stop. Is it worth it? No. You don't trade on this time frame. As I said, there are ways to trade the range, this range, using the lower time frames, but it will be too much for one session. Okay? We don't do it today. Price comes back. Again, it's here, the red thing in the range. a huge stop because this is the high. It's not worth it. But then it's kind of settling down. You have your first white. There's a stop about 60. You're going for 80. Yes. You have the first red. Okay, here we go. You have a stop of about 40. Price is going down 50, and then it kicks you out. Okay, doesn't mean that you trade and you win every time. If that happens, you wait. What do you wait for? You don't wait for the next short signal. You wait to see if this range is really going to be a range. So you wait either for the price to get down to support again, or you wait for a good sign, which could be a big spike like that one. Yeah, but again, it's not for today. Let's assume you know how that's done. You have a big spike. You can try it. If it's worth it, you do it. If not, you don't. Yeah. Then it's going back down. You have a long. You trade with the main trend. If it's worth it, you do it. There's another short. If it's worth it, you do it. You have another long. Stop below the range. This time it's not very big. It's worth it. Yes, it is probably. Okay. If it's spiking, it's kicking you out. Next time you try again. Here we go. It's worth it. Here it's worth it. Okay? And this is only taking these trades from the daily chart. And as I said, in a small range, trading the bounces on the daily chart is sometimes a little bit late. But I want to give you these examples so you see not everything is always perfect. But if you do it correctly, you can still make really good profits, and even in a small range like this. Yeah. The next step would be going to the 4-hourly chart and wait for, if the price is reaching this horizontal support, look for setups there. But as I said, we won't do that today. It's already 1.5 hours. Sorry, I just tried to give you things you can use right away, and want to explain in detail so everybody understands. So you know now how to enter the range, where to place a stop, and what to target. Okay, everybody? With the range? Okay, let's go to the trend now. Price is coming out of here. You have your support line there. And if I switch to the 4-hourly chart, that's what you see. Now, as I said, if you had your 36 EMA, it would guide you and show you this 1, 2, 3 clear and clean. But as I said, I promised you don't have to draw it. Let me zoom in. Sorry for that. Yeah, you have to change the angle at that point because the 36 is actually here. And then you have your third touches. So you don't use the 36, you just want your 3 touches. 1, 2, 3, you got it here. And in this example, this is a 4-hourly chart now after the price came out of this range. Yeah. Using the 36 EMA again, as I said, which we don't do, you have already an entry. Now we don't use it, you got another chance, don't worry. Price is going up. Okay, and it will come back down, and when it's coming back down, it's hitting your line, sometimes by the pips, sometimes not, sometimes it's breaking a little bit, but it came back after creating a higher high and a higher low, which is your 1, 2, 3. In this case it did not, but it did do it afterwards. So this one did not retrace back to your line, and this one did. So here's the same thing. Price touched the line. This is your profit zone. That's where you look for setups. Okay, and because you have a 1, 2, 3 and a higher high and a higher low, this is great because you know it's a trend, it's not a range anymore. Price touches the line, And when it's touching this line, you can start looking for setup. You can do it aggressively, as I said, which would be by placing orders, but we're not going to do it today. Again, sorry. But you wait for the first white candle that appears. And if the white candle appears after the bounce, you can place your order, which is actually not far from the basic Spartan entry rules, right? You take your long, and where you place the stop, you place it below your trend line that you've drawn. Okay? Always about 5 to 10 pips on the 4 hourly at least. And then, what about targets? You go back to the daily chart. If you don't have a horizontal line anywhere, that's where the horizontal lines coming into play. This is our previous highest touch. If I zoom in, we know that we have it up here, right? We know that already. We did it at the beginning. So go back to your daily chart and go back to the 4 hourly chart. So you have your entries here, right here, sorry, the hours here. And this is the area where you look for entries. You can do it aggressively, as I said, by placing orders, or you wait for your white candle. Even if you're not familiar with 1, 2, 3s and ABCs, look for the price to hit your trend line with the 3 touches. If you have this, wait for the white candle, take the trade after the candle is closed, place your stop below that, and then target the next important support and resistance area, which comes from the weekly chart, is it up here. So in this case, you have a stop about 60 points on the 4 hourly chart, and your next target was 400 points. So what happens here, you don't have a 60 or 70 pips target, but you have a much bigger target. Okay, then the angle is changing. Here we go. Or you can draw it also from here if you want a very clean one and extend it. Yeah, and you have your third touch. Remember, it's the same trend line. You just change the angle, and you need to have your 3 touches. So if that is touch 1, and you don't, as I said, use an EMA, you have to wait for the 3rd touch. And if it's close to resistance again, you measure and say, is it worth it? If I take my trade here and have a stop down here, my target is up here. If it's at least 1.5 times the stop, it's worth it. If not, you don't do it. Right? Is everybody okay so far? Identifying the trends, the range, drawing the lines, and the bounces on the lines are your profit zones. Now you can do it on horizontal support and resistance, and you can do it by drawing trend lines where the price creates higher highs and higher lows. And of course, a combination with ABCs 1, 2, 3s would be good. Okay. Now, as I said, there are 3 ways to do it. One I just explained to you. The second one would be by placing orders even before the price hit the line, like you extend this. Okay, give you an example. Price is up here. What do you expect is that the price comes back down, and you place an order before the price even reaches this area, because you expect the bounce. But for that we need a little bit more practice, and you don't do it all the time. And the other one would be going to lower time frames and look for bounces on the same area, like combining, for instance, the 4 hourly, 1 hourly chart, going early, again with an order, or live, having a smaller stop, and of course then also a bigger target. Yeah, because when you trade in lower time frames but your targets come from the higher time frames, you can make much more than you have risk. You just need to make sure you do it correctly. Okay? Is everybody okay so far? Quick yes. I know it's a lot of information in only more than 1 hour, 1.5 hours, but it's really important that you always remember to trade at those levels. Yeah, perfect. As I said, markets won't trend like that all the time. They will range, and sometimes they will do something in between, and you have to figure out how it's done. And that's why we're going to do also a special course in, what is it, October 20, I think. Yes, is it correct, Jeff? Did we set it for October the 20th? I think, let me check the dates. 20, which is Monday. Yes. So whole week special course just doing this live on charts, and we practice all three strategies on the live charts to make sure everybody understands, and you can also personally practice it with us and alone in trending and ranging markets, and on, of course, all popular Forex pairs and other products like gold, indices, whatever you like. It works everywhere. Okay. Now what I will do, because probably Jeff, I hope you didn't fall asleep yet. I will give the power to Jeff, and Jeff has a surprise for you, and will explain what he is going to do. Is everybody okay so far? You can all hear me, right? And you can all see the chats. Okay, let's switch over to Jeff. Thanks for listening to me, and I'll catch up with you soon. Let me just fix this here. Jeff, I have to find you in this big list.
Can everybody hear me? I don't think you can. Please give me a text message. Okay, cool. For some reason, it took a few minutes to kick in. Now, since Nick already did such a great job, and we're kind of getting near the 2-hour point, I'm not going to be sharing any new strategies because I think it would make our brains explode. But what I want to do is just touch briefly on what I'm going to be sharing during the course of the workshop, which is going to be October 20th to the 24th. And basically, I'm going to kind of take a bigger view on why you need to master these profit zones. And what I'm going to be sharing is more of kind of trading range strategies. Nick also has a great way to do it, which he just shared, which is with a trend. But I want to show you how to use it so that you can trade kind of very rapid and sharp reversals in the market. Okay, so there's a few reasons why you really need to understand what's going on here. Well, if you don't take a bigger view of what other traders are doing, you can get blindsided. In other words, you think you got the perfect setup, and it doesn't matter what system you're using. You get in, it looks great, maybe it goes up 50 pips, and without knowing, it's because you didn't realize that a lot of other traders are looking at key support and resistance levels. So you need to really understand all the levels that people are looking at. Okay, so that's the first thing. So once you understand where they are looking, okay, and you have to understand that there's two groups of traders. One are the professionals, and those are the guys you really got to worry about. And then secondly, it's the rest. It's all the smaller traders, which could be hundreds of thousands of traders at any given time. You have to know all the key levels that they're looking at as well. So what's going to happen is that when you understand where everybody is looking to place trades, you can anticipate, where they're going to make their move, and ultimately it gives you some great entry and exit points. And this is great for a couple of reasons. First would be simply that, let's say your current system isn't giving you an entry or exit. This will give you new opportunities that you didn't have before. Okay. Now, what I'm going to also talk about is what I call the market moving levels. These are any levels that can cause rapid reversals in the market. You're going to be familiar with a lot of these, like the Fibonacci levels, okay, the retracement levels. We also have Fibonacci extension levels. Okay, then you've got weekly highs, lows, monthly, yearly. These are all things that people watch. There's also a thing I'm going to cover, which is multi-touch swing points, and those are really one of the most powerful. and I'm going to go through, teach you how to find those very quickly. Another thing you have to be aware of is the large significant numbers in the markets. That can be something like, let's say, on the pound, like 1.5000 or 1.65000. Those move the markets. It can really stop them cold, so you really need to key in on those. There's another thing that a lot of traders look at. It's called the floor trader pivots. Okay. Sorry, let me just turn this off here. Another thing you really have to be aware of is congestion zones, okay? Because whenever you have a congestion zone, that is a high probability turning point in the market, okay? When the markets are kind of sleepy or they're congested, it always leads to high volatility, and that's where you're going to get some great opportunities. You also need to be aware of the EMAs, or the moving averages, that the big institutions look at, and some of the ones they love are the 50 and the 200 period EMA, and things tend to happen there. So there's a lot of levels to look at. There's also a lot of other ones I haven't talked about. So you need to know, well, which ones do you pay attention to here and which ones do you ignore. So I'm going to give you a kind of a cheat sheet so you can kind of condense all these in just a few minutes, and you'll know exactly what the roadmap is in the market. Okay, now a few things that I'm going to cover is, once again, how to find the most important levels and which to ignore. Okay, and the reason this is important is because there are so many levels that you can get crazy. When you start looking for levels based on all those things I just mentioned, you could have a chart where there are lines every 15, 20, 30 pips, and you'll become paralyzed. In other words, you won't know where to get in, you won't know where to get out. Okay, so you need to know which ones you have to pay attention to and which ones you can ignore. And then also, I know that Nikos loves the Heikiashin bars, and I love them too. Okay, and I use them all the time. But I'm also going to show you how to use the traditional Japanese candlestick patterns. Okay, and I only like about 2 or 3 of them. I believe there is over 50 or 60, but most of them really haven't proven to be worthwhile or give you any significant edge. So we're going to talk about just a couple patterns that you can use to trade these support and resistance levels. Also, I'm going to talk about, should you use indicators or not. Okay, this is critical. I know a lot of you love indicators, and there's many out there, and I'm going to really tell you which ones that you could use and which ones just will totally screw you up as far as trading these rapid reversal points. And then what's really important too is, we're going to be teaching you all this great information, but I don't want to get you confused. So in other words, I have to share a way that you can take these reversal levels or these support resistance levels and incorporate them into what you're doing. So the bottom line is, we want to enhance what you're going to be doing, not get you so confused that you can't even make a decision. Another thing that's really important is, you need to know what time frames to trade off of, and Nick has obviously gone through that a lot already. I'm also going to show you how you can go to maybe a quicker time frame, like let's say a 1 hour, a 30 minute, or 15 minute. That's to really get your entries super small, and it's more for, looking at smaller day trade type of things, or maybe 2 or 3 day swing trades. Okay, now I just want to, just very briefly, I'm going to wrap this up in like 2 minutes. And, please keep in mind, this is not some big sales pitch, but we want to share as much value as we can. We really want everybody to understand how the markets move. So once again, the workshop is going to be on October 20th to the 24th. And as you can tell, Nick really tried to go in some great detail today and give you as much as you can, for like basically a 2-hour period. But in the 4 days of the workshop, we're going to go into way more detail because we need time. Okay, you can't get one little formula that you learn in a half an hour and you know everything about the market. It takes time. You've got to go through a lot of examples. Okay, and then what we're going to do is, we're obviously recording this, and so everybody on this presentation, we're going to send a copy so that you can watch it again and learn even more. we'll also send you an email with all the details and all the things that we're going to cover in the upcoming workshop. Now, one thing we're going to do is keep this workshop really inexpensive. Okay, I believe the price for the 4 days is going to be about $157. Okay, and that's going to be, and then the price is going to go up to, I believe, $197 after a 3-day period. So basically, what we want to do is just reward everybody that wants to take action. Okay, so now this is the cool thing. What we're going to do, and we've never done this before, we're going to give everybody that signs up for this workshop 1 month to our live training sessions. Now the training sessions are something that are actually taught 2 times a week. Okay, there are occasions I believe Nick might add an extra session in there, but it's definitely 2 times a week. And these sessions are something that you can't access. In other words, people who do our live training only experience it through one of 2 ways. One is to purchase our Complete Trader program, which is currently, I believe, at $1,000, or they have to be a part of our Elite Mentor program, which is maybe, I think it's $3,200 now. Okay, so you're going to be able to experience how we go about training. You're going to learn exactly what we do, how we do it. You're going to get a chance to ask questions and really see how the other members are doing. And bottom line is, this is why people who go through our training are successful. It's because we keep doing this training. Okay, there's no other way to learn but to experience trades unfold real time and then be taught how to handle them. Okay, it's not about teaching past history, it's about learning as you go. So that is really it. Like I said, you've been here for almost 2 hours, so I don't want to just keep going on and on. And once again, we'll send an email out in the next 24 hours with a replay of the webinar. So that's it. Is there any questions at all that I might be able to answer real quick? If you have one, please type it in.